The Dow is very, very fickle. It's spotty. It doesn't want to listen many times what the other ones are doing, but it's usually very helpful when it comes time to looking for intermediate or intraday SMT divergences, where the Dow many times is the one culprit that will say, I'm not listening. I'm not going to make that lower low, or I'm not going to make that higher high, where the NASDAQ and S&P would. That is something that you want to add to your SMT notes, that if you have an SMT divergence that is using the ES as the divergence or the NQ as the divergence, those are going to be your stronger SMT divergences. What'd you just say? I just gave you some gold. True. Yes, I'll take an SMT divergence if it's the Dow, if I'm really, really strongly convicted about the idea I think the market's going to go. But I usually demand ES or NASDAQ to be the divergence because it's a larger degree of stocks, because the Dow is only 30. And those companies are, they're not what they used to be, versus 100 of the tech stocks or 500 of the blue chip stocks that are in the S&P Composite Index. So there's a little bit more weight placed on my SMT divergences when I'm using it as a catalyst behind the ES or NQ being the diverging index. So if that index is one of the two, ES or NASDAQ, I'm going to have a lot more faith behind that SMT divergence than it would be if it was just the Dow. So if I'm seeing it on the Dow, I have to have other things really siding with me that it's going to move. Otherwise, the SMT is not going to do it for me. It's not going to be the thing for me to say, yeah, this is a good qualified trade.